Hey guys, what's going on? There's not that much going on in the Bitcoin market this week. And so instead of having some sort of market update, I thought it'd be even better to bring Will Clemente, co-founder of Reflexivity Research, on for a very short conversation. We're going to talk Bitcoin, stablecoins, centralized exchanges, onshore, offshore, and a few other things. Here's my conversation with Will Clemente. All right, guys, bang, bang. Will, I thought a great place for us to start this conversation would be around the aggregate trading volume in the crypto markets. Is it going up? Is it going down? Is it going sideways? What's going on?
Yeah, for sure. So in the chart that you can probably see on the screen, you're just looking at the aggregated crypto trading volume. So you look at all the tokens across the entire crypto landscape and look at the daily volume that's being traded across all these tokens. As you can see in the chart, crypto trading volume this month is down from $23 billion to just $9 billion, which is standalone a pretty substantial decline. But when we look at kind of the trailing 2-3 years, it's actually the lowest that crypto trading volume has been since the end of 2020. And so what does this represent? It represents that the market's kind of in this period of apathy, and what I like to describe is kind of capitulation through time, right? We kind of have capitulation through price, and then we kind of bore a lot of market participants out and shake them out that way. And also just reflects the declining interest overall in the kind of crypto ecosystem.
What about the different exchanges? Are they all seeing this decline, or are some of them gaining market share or losing market share?
Yeah, sure. So when we break down volume and look at it across the different venues, Binance remains kind of the 800-pound gorilla in the room by far. Their exchange dominance across all the different venues in crypto is still 56%. It's come down about 15% from its peak the back half of last year after the FTX blow up. But Binance is still by far the dominant exchange.
And then if we look at the different exchanges, some of these are based in the United States, some of them are offshore. What are we seeing there in terms of, are the narratives of US companies moving offshore or traders moving offshore? Is that actually true?
Yeah, absolutely. You know, one of the issues that we've seen for crypto throughout the year has been kind of the regulatory uncertainty throughout the US. You've seen SEC and some other kind of like government bodies taking a very harsh stance. It's probably the friendliest way to put it towards the crypto space. And so with that, there's a ton of regulatory uncertainty for operators in crypto, including market makers, as well as crypto projects that are looking to launch here in the States. When we look at crypto trading volume broken down by, as Kaiko has labeled here in the chart, offshore and US based, we can see that the vast majority of crypto trading volume takes place offshore. About 86%, therefore 14% takes place here in the US. And I find it really hard to believe that this is going to change if we don't see more regulatory clarity here in the US, which is actually kind of the opposite of what, at least if the SEC and other government bodies are being truthful in that they want to kind of have provision over the space. What they're doing now is by looking at this data is doing the exact opposite of what they're saying they're trying to accomplish, right? By saying that we're going to not provide any certainty or friendly regulation towards crypto companies, it's forcing them to go offshore. Therefore, it's doing the exact opposite, giving them less provision of the entire space. In the same lens of if they were friendly towards crypto companies, encourage them to come within U.S. borders, they would actually have kind of more oversight and more quote unquote control on a spectrum of control that they'd like to have.
So you also looked at the various trading pairs, and what we see here is that we have USD, USDC, BUSD, right, USDT, etc. But there's a new TUSD that seems to be gaining tons of market share. Explain, what is TUSD as a trading pair, and then why is it eating so much market share from these other trading pairs?
Yeah, for sure. So in the chart here, we're just looking at all the different trading pairs and the percentage of overall trading volume that they make up. Over the last year and a half, the dominant pair has been BUSD. The reason for that is very simply because Binance launched a trading promotion where they said anyone that trades against the BUSD pair, which is their stablecoin that they created with Paxos, they don't have to pay any fees on the exchange. They removed that about 2 months ago in the back half of March, but they kept the promotion going for TUSD, which isn't some groundbreaking stablecoin. The only reason that their kind of relative market share has gone up of overall trading volume is simply the fact that Binance has kept that zero fee trading promotion going for them.
When you look on centralized exchanges, we can compare fiat to stablecoins, and it seems like stablecoins still remain the dominant kind of asset on those exchanges.
Yeah, definitely. We saw a slight hiccup in that around some of the USDC stuff, but stablecoins definitely remain the dominant trading pair, and part of that again is the fact that the offshore exchanges remain the dominant venue between offshore and US based. I think it's also worth noting that when we look at liquidity, this has just continued to decline, and also something to look at in confluence with the overall trading volumes. When we look at liquidity defined by, at least in the chart we have here on the screen, when we look at the 2% bid-ask depth, so essentially you're just looking at what's the amount of Bitcoin in the order books that's between the current trading price and moving the price up 2% or moving the price down 2%. So in other words, you're looking at, how much liquidity is in the books and how much price impact are you going to have as a large market participant looking to place a large buy or sell order. And so when liquidity declines, that means that there's a higher susceptibility to large volatility because larger players have a larger price impact on the orders that they're putting into the book. And so this has continued to decline since last year, especially had a sharp decline after the kind of collapse of FTX. And we've actually seen that translate to some tangible announcements. So Jane Street, which is a very well-known traditional market making firm, announced that they're pulling back from their crypto operations entirely. And Jump, who's also a well-known market making firm from traditional finance, who has been pretty active in crypto. I would say them and A16Z are two of the largest players or have been in the crypto space. Also announced that Jump's going to be pulling back their at least US-based crypto market making operations. They said that they're going to migrate that to offshore, and they'll continue kind of operating in that way. But again, both of those things are just tangible reflections of a lot of the regulatory uncertainty that we've seen in the US, and that also has been reflected in overall liquidity measures, both across BTC and Ethereum.
When we go and we look at stablecoins, what's interesting to me is that Tether still makes up like 76% of all stablecoin usage on these centralized exchanges.
Yep.
We just talked about all these trading pairs and different assets and different dominance for those assets, but Tether remains king in terms of just straight stablecoin usage on the platforms.
Yeah, it's kind of funny, I guess is the right word to say, with all the concerns around the transparency from Tether. In the crypto community, a lot of people like to call the people that have been bashing Tether for the last 10 years the Tether truthers. I haven't gone in and kind of broken down some of their attestations and things like that in as much depth of other people. But it is kind of funny to see a lot of the concern that people have been expressing around Tether. Meanwhile, their market share is at an all-time high, and USDC, who is kind of advertised as this transparent alternative, their relative market share has been on like a perpetual decline for the last 2-3 months, ever since they had a lot of the issues around the SVB banking crisis stuff. So yeah, now Tether's dominance is up to, I believe, 76%. At least in terms of like the aggregated stablecoin supplies, it's somewhere around that for the trading volume that they make up. And we also have seen that the number of Tether that have been issued in circulation is also about to break all-time high. I think it's within like $100 million or so of doing that.
The last question I have for you is around SushiSwap and Uniswap V3. It looks like SushiSwap basically had 100% market share of these two, and then all of a sudden, out of nowhere, Uniswap's V3 has absolutely dominated the market. What's going on?
Yeah, so in this chart, we essentially just look at the relative market dominance between Sushi and Uni, only because those were the two DEXs that we were able to get on the chart, like on the fly when we were creating this. It'd be much better if we had kind of an aggregated view of all the major DEXs. But the point I'm just trying to illustrate here is that Uniswap has been the dominant DEX by far. But what I think is even more interesting, we don't have a chart for this specifically, when you look at centralized exchange volume relative to decentralized exchange volume, decentralized exchange volume has continued to make higher lows and actually has reached an all-time high over the last few weeks. And so what does that indicate? I think, again, it's a reflection of that regulatory uncertainty, right? Because as you have more of that in the US, people are going to move offshore, but also on chain. And so as you have a lot of these DEXs that continue to build out their products, increase liquidity, kind of easier, interfaces to interact with these protocols. I think it's also logical to expect that trend continues as well. So, as things kind of currently sit, I think the trend of continued capital moving offshore and on chain with the regulatory uncertainty here in the US is likely to continue.
And so the decentralized exchanges continue to hit all-time highs in usage. Do you think that'll continue?
Yeah, on a relative basis to the centralized.
Awesome. I hope you guys enjoyed today's conversation with Will Clemente, co-founder of Reflexivity Research, and we'll see you guys next week.